afternoon or morning or any time of the day you're watching this. I don't know exactly what time that is, but welcome back to Small Cap Recap. I know what you're thinking right now. Bryce, where have you been? Picking up this pen is where I've been for the last month. Now, you guys know it's been 4th of July last week. It's been busy. We've kind of all had conflicting schedules here, but couldn't be better timing to come back because the market is actually getting a little bit hot again for once. Really some real movers here. This isn't starting to heat up. No, it's actually kind of hot right now. So I don't want to waste too much time with this introduction. Instead, I want to get right on into the charts of what's moving right now, the way that I think they're best traded, and how you can take advantage of these kind of moves in the market. So without further ado, switching on over, and here we are. All right, so guys, over the last, this week really, after the 4th of July weekend, or 4th of July week, last week was a little bit, I don't want to say slow, but definitely, slow. Low volume, not much moving for the holiday week, and it seems like once everyone got back to their computers, stocks just went to the moon. And one of yesterday's best runners was ELOX, ELOX, pharmaceutical company. Low float, had a very, very low volume gap up, and really not even much of a gap up. It basically gapped up from 4 to 450. Nothing crazy, but we had a halt right out of the gates when it broke pre-market highs at right around $5. And I've noticed in this market, there have not been many stocks that break pre-market highs. And so those ones that have broken pre-market highs have tended to do very well, and we're going to get through some of those other ones here too. But ELOX yesterday breaks pre-market highs at around 520, and then we just consolidated over that pre-market high break right in the 550 area, and once it broke out over that 550 level, it just went, clearly to the moon. Right? I mean, it closed the day with a high of right around $10. After hours went up to 1240, and obviously today, I'm just kind of chilling around those areas. I'll go over that in a second too, kind of what I'm looking at here for a potential day 2 or even day 3. But I want to go over a couple of key things that I think are important to keep an eye on. Again, pre-market high breaks being one of the most important things, just because in a slower market, shorts get their way, being able to risk pre-market highs very easily when they're not breaking much. And again, over the last month or two, we've had very few stocks break through, gappers, I should say, break through their pre-market highs and continue a run. A couple that break over and fail almost instantly, but very few that have broken and actually done anything with it. And so here with ELOX, we've kind of gotten that. Now, again, pre-market high break, number one, first and foremost, very important there. But again, another important aspect that I always like to look for, and I don't have VWAP up on this day, but this dip likely slightly under VWAP, that big wick candle and that being the kind of lowest point it had after that pre-market high break for the entire rest of its consolidation during this period, it was consolidating over pre-market highs. And this is extremely important. It needs to hold those levels. And that's what we need to see in every one of these stocks we're looking for. Now, I did not actually trade ELOX yesterday. I was a little sketched out by it just because, again, we haven't seen all that much running, especially the previous week before that. And I'll go over day 2 moves here in a second, but PWM was another one of those stocks that had been moving over the past couple of days, just kind of kept breaking pre-market highs. Today, not doing too much. But once we got this gap up here, right, it took some time. Started the day off green, but really heavily dipping down. And, there were a couple trade opportunities on that, but not much confirmation. However, once we broke pre-market highs, it became much easier. These levels now, obviously right up here in the 14s where I'm looking at, there wasn't an official break. Well, there was a break, but it wasn't consolidating necessarily right over it. It was, however, consolidating right at pre-market highs, which again, given where this came from, very impressive. And that led to 2 actually very easy, in my opinion, trade opportunities on it. I was not at the market this day. I wasn't at my screens here, but we have this consolidation zone right here where you have 2 potential risk levels, either down at 13, or if you're feeling really, really risky, you could even just be risking down here at 1420 on this low as we're breaking through this trend break here. Lined up nearly perfectly. two pretty easy risk levels. Then once again, another consolidation zone right here with very low risk reward, or low risk, high potential reward. Very clean, easy break once pre-market highs are broken and continue. Same thing here. PWM opened up slightly red on the day, but this was a day two, right? This was a day two move now. So that pre-market high break is a little bit less meaningful when it's not a day one gapper, when it's a multi-day runner that shifts slightly. And so this day two move was just really nice. It held up basically over, I'll kind of go through and mark some of the resistance and support levels that I saw here, and you can see how easily it lined up. But this held the pretty major levels it needed to. A pre-market, not high, but a pre-market perk here, that halt up, that dip. These levels were pretty key, and once it broke out of there through that trend, it was kind of just off to the races. Multi-day movers, especially off of day one gappers, in my opinion, are a lot easier to trade. The levels are a lot simpler. Generally, risk reward is a bit easier as well. You just might need to be a little bit more patient. Now, at this point, PWM, I'm not saying it's done by any means. I think there are better and easier ones to focus on. Especially after that big dump, it kind of failed. It was a failed breakout through 30, and then it dumped all the way back down to 17. I'm not really focusing on this one all that much. I'd be looking towards ELOX for actually a very similar kind of potential break, even right here. We're at that kind of key resistance level right under 9, but still holding well over 8, holding that mid-range. This is what I'm looking for on a day two. Maybe slightly under, maybe slightly over VWAP, but a really clean setup with really easy risk reward, holding near previous days' highs. PWM, ELOX, good examples of that. We'll see if ELOX ends up following through. That'll kind of help determine if this market is staying hot or if this is kind of a dud. Because once we go over to PRFX here, this ran yesterday. There are... the rest of the charts I'm about to go into here are a lot harder to trade. But it is a sign of a market heating up, and it's a total halt fest. So PFRX, no gap up yesterday, opened up right around $4. And, once the market starts getting hot and one stock just kind of starts running for no reason, it's hard to tell how high they can go, especially when it does just turn into a halt fest. Sure, you can try to buy at any of these, on halts, but it doesn't look like a very normal chart. It just opens up, halts, and that ends up turning into a problem. Now, with these halt fest types of stocks, there are really oftentimes really easy consolidation levels to actually trade on after that, whether that's a breakout or a breakdown. Now, I don't tend to be as short biased on these, especially the ones that just kind of move out of nowhere, because again, they can just start halting up again at any moment. I've watched these go through 100, 200, not really 300 all that often, but you get the point. That's like 10 times down there. So trading these halt fest stocks, which I'm about to go into, I think one of the keys is actually waiting for those halts to be done, seeing how well they hold up into the end of the day, and then trading those consolidation breaks as the risk reward gets really tight. Again, whether you want to choose short or long is kind of up to you. It does get pretty choppy on both ends afterwards, but if you can be patient and wait for an area of really tight risk reward, there are a lot of potentials there. Just like on PFRX here, on this 1430 break, you could have very easily risked about 20 cents, 20 or 30 cents there. And I mean, you got multiple dollars a share. And even here on this breakdown, very similar. You can risk 19, shorting about 18, and went down to 13. It's 5-to-1 risk reward right there alone. There are opportunities on these, but wait until the halting is done. Don't try to catch the front side of this on either side, long or short. Because again, we don't know how high they can go, but most of these halt fests, when they are done, they do dip pretty far off of their highs. And as a short, if you're shorting that front side of it, good luck. You don't know how high these can go, and it's really hard to get out of them. HCTI was kind of today's version of our halt fest stock, but this one's a little bit different now, where it did halt up a couple times, and it broke pre-market highs, but again, ever so slightly. We only broke it for about a candle. It halted through it and then opened up underneath that pre-market high break. Yet here we are just kind of setting up for some potential levels into the afternoon. Now, again, we'll see where this all ends up going. In fact, you may even be watching this the next day. And so kind of look and see how these reacted since the time that this video is being made. Since, what time is it? 12 12:43 market time. Still plenty of time left in the day, but these are what I'm looking for based on kind of the previous movers we've had over the past couple days and just from HaltFest stocks that I've seen over my time trading. And so, you know, we've got these HaltFest stocks going here, HCTI. I'm waiting for the consolidation on it. Things like AULT, these didn't even, guys, be careful on these ones. Again, the real big key, if you're a long bias trader, you really, really want to either maybe not be waiting for a pre-market high break, but the pre-market high break in this market, in my opinion, is one of the biggest signs of confirmation for a potential run. Now, underneath, there are still opportunities, but like on AULT, this was kind of a halt fest this morning, but it was under VWAP the entire time, and it's just gone nowhere, right? I mean, it opened up at $5 at a high of 640, and now it's just chilling at 520, going nowhere. And, you know, similarly, we have, unfortunately, I was hoping that something like RXRX would turn into a bit of a halt fest because I thought it'd be a little bit easier to trade. Well, maybe sometimes when things are too easy, they don't work. But I am pretty surprised that we're holding up near VWAP here. But again, we're so far from pre-market highs that for me, as a long going into something like this, I don't know what the potential of that really running is. We're under the open price. We're under VWAP. We're under pre-market highs, obviously, since we're under open and VWAP. But don't get distracted by noise. Just because the market is hot doesn't mean that everything needs to run. This isn't 2020. This isn't the beginning of 2021. A hot market is great because it allows us to know what, things are moving, but it's still important to wait for the good setups. And for me, the ones that I'm noticing are best. I keep saying this so many times because of how relevant it is in this market. Those pre-market high breaks are huge, are really important. And that's not to say there's not trades underneath those levels, but the confirmation is just simply a lot less. Another one of those HaltFest stocks that, again, you know, whether you wanted to trade or not, BDRX yesterday very similarly went from 390 to 970, more likely than not just as a sympathy to PRFX that went crazy as well. Again, once we have those halt up stocks, that's when you really want to just be diligent on checking in on the market, seeing what's moving and waiting for the right opportunities. Even if you just wanted to take a relatively simple trade on the backside here, you had pretty decent opportunities, not even great, but there's still a lot better opportunities than randomly buying here. Let's say you buy at like 750, randomly on the halt up, and then you're stuck through a halt down, another halt up, and it's really choppy, hard to get out of, and hard to determine a really easy price target. So for me, waiting for these stocks to stabilize a bit has proven to be the best risk reward and some of the easiest trade scenarios in my mind. Now, I'm not saying that's what you have to do. If you're a short seller that shorts parabolics, go for it. Like that's not who I am. But I also think that if that's not something you do currently, don't think that that's a great way to add it in. Or if you see all these stocks halting up and you're normally a dip buyer, but you decide to start chasing because everything's halting up, all it takes is one big loss. And I'm actually going to get off of the screens here and go back to my face. The way to trade in a hot market is to really be patient and wait for the easiest stocks to set up for the easiest setups. The ones that ran a lot will likely have another run. Very seldom do we see a stock run from 3 to 27 and then fall from 27 back to 3 without a bounce. In a very similar way that very seldom do we see a stock go from 3 to like 100 or 200 without a pullback first. There are opportunities to get in the best stocks. It really just comes down to being patient, but not trigger shy. You still need to be able to click the button, just waiting for that setup. And I know that's what trading comes down to at all times, but now we have opportunities day to day where maybe it's more than 1, 2, or 3 setups where even if it's just a scalp on the backside, they're very oftentimes low risk reward. You know the ones you need to be looking at. This is how to trade in a hot market, because this could last for a week. It could last for a month. It could be over tomorrow. I don't know. But what I do know is that I'm not going to sit here trying to gamble on which ones are going to go to 1 million. I'm going to wait for the ones to set up correctly, trade the consolidation breaks that happen afterwards, and try to keep that risk in check. I don't want this to be an excuse for me to get lazy with my trading or degenerate or gambly. I want this to be a way to now say, okay, I can take a little bit more size at really easy spots when I can be patient. If anything, this should only make your trading a little bit easier. But I understand it's tough to get, it's tough not to get FOMO when you see everything running without you. Just remember, there are opportunities after that run is over on both long and short sides. Anyways, that's kind of, I wanted to give an overview of the market. There are other runners. There are some sub-dollar stuff moving as well, but these ones are actual breakout charts in a way. And these are kind of some of the best signs of a hot market that I've seen in months. Now, again, it could end tomorrow, but with how many halts are happening right now, I think these are things you got to keep an eye on right now. So if you want to take advantage of this hot market and trade live with me every morning, Monday through Thursday, click the link down in the description below for a trial of small cap rockets. I'm giving webinars right at market open, taking live trades when they happen, when there's a setup there. And if that setup isn't there, I'm going through and giving my commentary as to the ones I think are going to be the best watches for later in the day. And when we do have hot markets like this, I hop right back in and we'll keep teaching whatever is there. So if you're looking for how to basically trade these hot markets in real time, click that link in the description below. You can get access to that trial. But other than that, guys, that's all I've got for today and for this week. Stay ready, stay prepared. These are the moments that we live for as traders because they can make a big, big portion of our year. All right, everybody, I'll see you back here next week. Thank you so much for watching. Fingers crossed, knock on wood that market stays hot. And until then, trade safe. I hope you guys enjoyed this video, and thank you so much for being a part of the Stocks to Trade family. We just hit 100,000 subscribers, but our goal by the end of this year is to get 150,000 new family members a part of our channel. So if you haven't already, be sure to hit that like button, comment down below, hit the subscribe button, and maybe even turn on your post notifications. We cannot do this without your guys' support, so thank you so much. And if you want to see more of what we're doing, again, hit that subscribe button, hit that like button, and comment down below. We'll see you in the next video.